the recording. I think you're all going to find today rather interesting. Why? Because, I don't know, you're just going to find it interesting, if not entertaining. We're going to do quite a bit live today. Welcome to the PitView Education Series. This is PitView Basics. However, today, even though this is a basic subject matter, the reason why I like to teach this subject matter so much is because what most traders need is confidence in what they're doing. And where confidence really starts off in the market is being able to identify the trends. I mean, people always say you trade with the trend because the trend is your friend, right? And being able to identify the prevailing trend in the market is really important. And that comes down to what I call comparison analysis. Some people might call it cross-currency analysis. So what I'm going to do is I'm going to briefly go through like two or three PowerPoint slides here. However, whenever I've taught this to students, the big question that comes back to me is, well, how do we, we know how to go through PitView on it, and we will, because on PitView, in order to do this type of analysis, you only have to pull up one window. It's very simple, global view. However, a lot of people come back with me with the question of, well, how do we do this on our charts also? Because, a lot of tools that you use in trading, you want to use tools and charts together. A great tool like PitView is not used on its own on an island because you need to be able to use your charts. So you use everything in tandem because you have to be able to look at the price action on the charts also, along with what the market makers are doing through the PitView indicator. And I don't know why I'm talking with my hands so much. Maybe it's because I can see myself a little clearer on here. But anyway, let's go ahead and get started, and thanks for coming in today. All right. So let's go first through the common trader question, which is this. Which currency do I trade? And again, only a couple of PowerPoints here, and then we're going to go live to the charts in PitView to kind of explain this to you. As stated on the PowerPoint, when it comes to the Forex market, most traders make the mistake of they fall in love with a currency pair, if you will. It's no different than the stock market. A lot of stock traders, what they'll do is they'll fall in love with a stock and they'll only trade like one stock, and they won't trade the stock that's actually in play in the stock market. They just get obsessive about just studying that one stock that they trade. In the Forex market, at different times during any type of trading environment in foreign exchange, there's often going to be different currencies that come to the forefront of the market that become what they call in play. We also call the in play currency the driver currency. What is the driver? The driver is the currency that's driving the overall strength of the market, or the driver can also be the currency that's driving the overall weakness of the market. And that's really where comparison analysis comes in. And it's a very simple thing to do. And I don't care if you're brand new to the Forex markets, you can all do this. I can guarantee you that. So the follow-up question, what is the in-play currency? We just talked about that. When you see on my screen here where it says the currency that is driving overall strength, driving, that means the driver of overall strength or weakness in the market. What I tend to call these things, I've heard others use it now, but I think I coined the terms. I call them the bully and the wimp in the schoolyard. The bully is the currency that no matter what other currencies are trading against it, it's kicking the crap out of every currency that it trades against. And the wimp is the currency that's getting beat up by all the other currencies. And a currency at any given time can either be the bully, the strong currency in the market, or the wimp. When we match these things together, when we match up, if you were a schoolyard fight promoter, if you will, and you wanted to put yourself in the highest probability situation to know the outcome of a fight, you'd probably go find the toughest kid, the strongest kid, and match them up with the wimpiest kid, right? And then you'd probably have the highest probability of success of predicting the outcome of that fight. I know that's a bad way to say it, but that's kind of the way I think about things, because I tend to be I tend to put things into sports terms, and I was a wrestler, so into physical terms. So how do we find the in-play currency? That's through comparison analysis. For example, basic comparison analysis comes from being able to look at a chart and find the prevailing trend of the market. If you were to look at all these charts, what we're looking at is the 8 major pairs. Now, when I say 8 major pairs, I mean the dollar, the euro, the pound, the yen, the Swiss, the Canadian, the Aussie, and New Zealand. You know, those are generally going to be the 8 most actively traded pairs on the majority of brokerage platforms. However, we all know that there's more currencies that trade than these, but these tend to be the ones that drive the majority of market volume. So you can see I have 7 charts on here because what I have on here is I have the yen compared to all the other currencies. So there's 7 charts. When I look at all these charts, you can see that they all look relatively the same, right? When you look over here, we have, here, let me pull up my little pin here. We have euro yen right here, pound, CAD yen. These are all the yen pairs, and you can see that all of these look relatively the same when you look at the overall market action. And this is just looking at a short, what I call a short-term view in the market. So when you look at euro yen right in here, the yen is the quote currency on all of these. So if you looked at the euro yen, and if we looked at all these charts and we were to say, okay, well, how is the yen performing against all these other currencies? Well, we would look at the euro yen and see that it's going straight down. When that's going down, obviously, that means the euro is getting weaker and the yen is getting stronger, so that is showing that the yen is strong. The pound yen, again, it's also making lower highs and lower lows, going down, pound getting weaker, yen getting stronger, also yen strength. Dollar yen's going straight down on this chart, so that is also showing JPY as being strong, a dollar weak, yen strength. Swiss strength, Swiss weak, yen strong on here. CAD yen up here going straight down, Canadian weak, Japanese yen strong, and Aussie yen, yen strong, and then New Zealand yen, yen strong. When you look at all these charts together and you were to come up and all you wanted to do is answer a simple question of, you know, how's the yen doing today? You know, we're not looking at just one chart. We're not looking at just the chart on the dollar yen to try to gauge this. We're looking at the relative strength of the yen versus all the other pairs. And when we look at this, we can say that, you know, what's driving overall strength in the market during this short-term time frame? Well, obviously, the yen is driving overall strength. It is driving strength, meaning no matter what currency you put up against it, it's driving the strength. They're all kneeling down to the yen, if you will. So this would be considered the bully in the schoolyard. If you're trying to find the prevailing trend of the market, as you can see here, if you were looking to place a trade, if you will, what would put you in the highest probability situation if you were wanting to trade along with the prevailing trend, trade with the trend because the trend is your friend? Well, essentially, you could look for short signals or signals to go short on the yen and on any one of these time frames. And because the yen is driving that overall strength, you would certainly put yourself in a good situation in order to trade along with that prevailing trend. So the view on the yen obviously is strong, thus it is driving overall strength in the market. Now, this is how we do it on charts, and I think it's very important for all of you to know how to do this on charts, which is why I'm going to show you how to set up this type of view on your charts. But there's also another way that we can use it by looking at what's called global view. Now, the great thing about global view is once you learn this basic premise of what comparison analysis is, of finding the overall driver of strength and the overall driver of weakness on the charts, what global view is doing is it's giving you that same view of strength and weakness, only it's giving it to you from a market maker's perspective. It's showing you what's been the most well-bid currency over a certain time frame or the strongest currency that market makers are bidding up, and it ranks them from top to bottom, from what currency has been strongly bid from the market makers down to which one has been strongly offered with the market makers. In this case, you see the dollars on top and the Aussies on the bottom. So this is giving you a different view of it because it's telling you real time the market maker perspective. Now, when you look at this, the most well-bid currency over these past 4 hours versus all these currencies, this shows us, this wasn't taken during the same time frame. This was just an older PowerPoint that I had, but you can see here when this ranks it from the market maker buy-sell imbalances, it shows the dollar being the most well-bid currency or the strongest currency, and it also shows the Aussie down here as being the best, most well-offered currency with more sell imbalance from a market maker perspective. And what it's doing is the same thing I just showed you on those charts. It's not just looking at one dollar pair. It's looking at the dollar ranked against all these other currencies in here to show you which one it's being most, it's showing you that when you compare it to all the other currencies that are traded in the market from a market maker perspective, that the dollar's being the most well-bid currency with all the market makers. Now, it's great to be able to show this on a, on a PowerPoint, but my goal today was not to do that much on the PowerPoints. My goal today was I think the more clarity is taken from the markets when I show you how to use these on both your charts and global view as a complement to one another, to where you get, obviously a more clear view, more seamless view, if you will, of what's occurring with this type of analysis. So let's go ahead, and what I'm going to do is I'm going to show you how to set this up on the charts. So I'm going to discard my ink annotations, and I'm going to pull up my MetaTrader platform. You should all be able to see my MetaTrader platform now, but let me just make sure by checking the audience view. Yes, you can. Sweet. All right, so let me pull that up. And I'll pull up my notepad too, comparison analysis. Essentially what we are trying to do is we're trying to find, what is the prevailing trend in the market? What is driving strength? And what is the driver of weakness? Before I pull these up on the charts, let me just kind of give you an idea of how I gauge these, because we all know in the market that we want to find, there's 3 important trends that a lot of traders try to identify in the market, depending on what trading style they use. And these are called look-back periods. Because I'm just going to give you a basic overview of what to look back on. So for long-term trends, I like to look back 3 months. I always say approximately 3 months, but or 1 quarter worth of data to try to figure out what the long-term trends are in the market. The medium-term trend, I like to look back the more swing trend, 1 month of the market. And the short-term trend, I like to look back 1 week in the market. So approximately 5 trading days, essentially, to try to find there's 5 trading days as far as full trading days in 1 week in the Forex market. When you take it from 5 p.m. Eastern time on Sundays to 5 p.m. Eastern time on Fridays. And then the real-time trend when it comes to this, and this is something where I absolutely adore PitView for, because you used not be able to really identify this really short term with a high degree of accuracy. And the real-time trend, I use Global View, the PitView platform, which is kind of an added bonus to this type of analysis that I've just started being able to implement in my trading because it's such a phenomenal tool. And going back about a year on it, it's deadly accurate of being able to do this type of what we call top-down analysis. When you have all 3 of these things kind of lining up with one another, it can make for extremely high probability trading. Not all the time is something going to be driving all the trends, but when they do, you'd probably want to take notice. Now I'll show you what I can use as far as different time frames on the PitView platform as soon as we get done. And what we'll do is since you know how far I look back on these charts, I'll start off just since the default on the MetaTrader platform is 1 hour charts, we'll start by setting up a short-term trend. So we'll do this, we'll try to identify, so for our example, we'll identify the short-term trend on the US dollar. And I'll kind of explain why we look at the dollar first. The dollar is the most widely held currency held in reserves around the world. The dollar pairs are considered to be the major pairs. So we'll just start off by setting up a short-term view on the dollar. Now, as you can see on, I know a lot of you use different platforms, but most of them have this type of charting functionality, so it should be relatively the same no matter what platform you use. What I'm going to do first is I'm going to pull over all the dollar pairs. And what I mean by pull over is I'm starting off, if you pull up your MetaTrader and you already have charts set up on your screen, go ahead and close them all out by Xing them all out. And then what we'll start doing is we'll start going in and slowly pulling the dollar pairs over onto the screen. So we'll start off, I'm going to left click on the euro dollar, I'm going to drag it over to my screen, and I'm going to release. Then I'm going to go to the pound dollar. I'm going to left click on the pound dollar, drag it over, and release it onto the platform. The dollar yen, left click, drag it over. Make sure that when you release it into the charting area, the gray charting area, that you release it on the gray background. If I pull dollar yen over and I release it on top of the pound dollar chart, it's just going to change pound dollar to dollar yen. So make sure that when you left click and drag it over, you're dragging it down into the gray area. So there's dollar Swiss, New Zealand dollar, Aussie dollar, dollar Canadian. So now I have all these charts set up. I have the dollar versus all the other 7 majors on here. Euro, pound, yen, Swiss, New Zealand, Aussie, and Canadian, which should pull up 7 total charts. From here, we can't really identify anything because at this point it looks more like a jumbled mess, correct? So what I'm going to do is I'm going to go up here under Window, and you see where it says Tile Windows? I'm going to tile them on my screen. That way I can get a snapshot of what's shaking with all the currencies. Now the next thing that you might ask, which is a valid question and a valid point that I get from a lot of students, is I know it's very basic, but I hate the view on these charts. Let me quickly show you. I know a lot of people use MetaTrader 4 as a platform. If not, most platforms will allow you to change the color scheme. Because I hate using, I don't really like black background charts. They hurt my eyes for some reason. So if I right click on any one of these charts and go down to properties, it's going to pull this up to where I can change the scheme on my chart. So let me just go through this real quick. I'll show you how I set them up, and this can be customized for your viewing pleasure. I actually prefer charts to have a white background, and I'll change the background and foreground around. So the foreground's black and the background is white. The grid, you see that little grid scale up in here? I really don't like that for some reason. It just bugs me. So I turn the grid off by clicking on none. I don't want a grid. For my bar charts, this is where you can just customize other things. For up bars and down bars, bars that close higher than where they open and bars that close lower than where they open, I'll make those green and red. Bullish candlesticks I'll make green. Bearish candlesticks I'll make red also. Line graph, since it tends to be neutral, if I do happen to pull up a line graph, I'll just make that navy blue. Volume, since there's really no true volume disseminated in the markets, if I'm on a platform that happens to show it, I'll put none on there. My ask line and stop levels, which is generally going to be my open trades. That's where my current trade stands, and where my stop levels are. That's showing where my stops and limits are. It'll show kind of a dotted line across your screen. I'll make those navy blue also. I'm a big blue guy. And then under common up here, whenever I pull up my charts, I generally first look at candlestick charts. So under the common ones, I'll click on candlesticks. And then what I'll do is once I have, that's the only thing I'll really change under here under the common. And so what I'll do is I'll click on OK, and that'll change that euro dollar over to my color scheme, if you will. And you see it pulls up automatically 1 hour charts. From here, for those of you who don't know, what you can do is, so that you don't have to, if you right click on this euro dollar chart and go to template and go to save template, I can change this over and say, okay, this is my PitView template, my PitView basic template, if you will. This is a basic class. And so now on the dollar yen, I don't have to change all the parameters. I can just go change the template. If I right click on the dollar yen pair, I go to template and I'll just right click on each one of these pairs, and I'll change it to the template I just created. There we go. And from here, if we're creating a short-term view, we don't necessarily have to look at all the data on the charts. If we want to, we can zoom in, zoom out. Like if we zoom in once on all these charts, it'll take us back approximately 5 days or 5 trading days approximately. See, we're currently on the 27th. It'll take us back to the 22nd. So what I'm doing is I'm clicking on each individual chart, and I'm just zooming in on them. I'm just clicking the zoom button once on all of them, and that'll just give me a better idea of what's shaking with the dollar. Once you have this saved in a format that you like now I'm looking back approximately 5 trading days. Actually, that's not 5 trading days. I forgot that it's only Wednesday, isn't it? Actually, I'll have to zoom out once on here. Let me zoom out. I don't have the price scale fixed. I forgot 22nd only takes us back to Friday. We need to go back a little bit further. I usually initially set these up as daily charts. Sorry about that. All right, now we're looking back. That takes us back to 5 trading days. I knew I was doing something a little bit different than what I normally do. All right, so now we're going back to the 19th. Now this gives us a better view of about 5 trading days in the market. Sorry about that. And it has to be, and it doesn't have to be exact. It can be approximate. But now let's look at all these charts together. Now that we have a short-term view on all the dollar pairs, and all we're trying to do is identify, what is the short-term trend on the U.S. dollar. And what we'll do is we'll do it on kind of a scaled basis, and we'll look at the dollar. We'll look at the dollar versus the euro, versus the pound, versus the Swiss, versus the yen. And here, let me just bring this up. Don't worry, I'm not erasing anything on these notes. Versus the yen, versus New Zealand, versus the Aussie, and versus Canadian. And all we're trying to do is identify, okay, for the last week's worth of trading, is the dollar strong? Is it weak, or is it sideways versus all of these currency pairs? I'll just narrow my window down. There we go. So let's start off looking at the dollar versus the euro, and try, there's a little question thing on here, so just try to play along with me here. If you had to ask, okay, over the last week or the short-term view on the dollar versus the euro, is the dollar strong or weak versus the euro? Yeah, you can see that the euro dollar for the past week has been shooting straight down, so that means the euro has been weak and the dollar's been strong. So we would chalk that up as dollar strength. Okay. Now, I'll just put an X in that little box. Now let's go down here to the pound. What I generally tell my students to do is, if you're looking back, there's a lot of things that we can do to analyze what's happening short term, like today. You can see the pound is actually driving up a little bit and breaking through some resistance, but it's still making lower highs and lower lows throughout this time. So if you looked at the dollar versus the pound, what I usually tell my students to do is look to the left side of the chart, to the right side of the chart, and look at the slope, if you will. So dollar versus the pound, you can see it started up here a week ago and now it's down here. So overall, what you would say is dollar's strong versus the pound also. So we would chalk that up to strength. So this is the dollar versus all these currencies, by the way. All right, so let's go. Next one on our list is the Swiss franc. Now on the Swiss, when you're looking at the Swiss, the dollar's the base currency versus the Swiss. So if we look back at where it was a week ago to where it is now, if you had to say, okay, how's the dollar trading against the Swiss for the last week, you would say, okay, the dollar is strong and the Swiss is weak. So we would chalk that one up to dollar strength. Now let's look at it versus the yen. Okay, the yen coming up here. You can see we started way down here. The yen's up about 170 points or so from its lows last week. If you look at the dollar versus the yen on here, you'd probably say dollar strong, yen weak. So we'll chalk another one up to dollar strength on that. Looking at the New Zealand US dollar, started up right over here. The new dollar's back to being the quote currency on the right-hand side. So when we look at the overall slope in here, we would say New Zealand weaker, dollar stronger. So we would say the dollar is strong against New Zealand also. How about versus the Aussie? We started off over here, and now we're right over in here. So if you had to say strong, weak, or sideways versus the Aussie, what would you say? Yeah, you'd probably say sideways versus Aussie, right? And we're just looking at the last week's worth of data. And then let's look at dollar versus Canadian. Dollar's right over here, Canadian's right over in here. If you had to kind of call it as far as what the dollar's been doing versus Canadian, you'd probably call that sideways also. We started off over here. We're right back where we started from a week ago. So you'd say overall, dollar went up, dollar came down, and now it's trading right about where it was last week versus Canadian. So if we're looking at the, the short-term trend on dollar, it's strong against 5 currencies. It's weak against 0. And it's sideways or neutral against 2. Now, if a team had a record of 5, 0, and 2, would you say, is USD strong or weak? Well, let me ask this in a different way. What is your short-term analysis on US dollar? And again, you can, you can change these time frames. You can kind of look at different trends through different time periods. But what is your short-term analysis on the dollar? If you saw that this was the dollar's record, if this were a football team halfway through the season and they had 5 wins, 0 losses, and tied twice against 2 teams, would you say they were a good or a bad team? You'd probably say overall, the US dollar is strong, right? You'd probably say overall the dollar's showing a little bit of strength on these. You see, this analysis is so important because from here we can start looking at other currencies. We can start looking at the longer-term trends. We can start looking at the medium-term trends. We can start looking at PitView and look at the really short-term trends in the market to see what's driving market maker strength and weakness right now. But it's so important to be able to do this because if you looked at the dollar right now, you'd probably be saying, okay, what I usually do with my students in my other business, I teach and mentor students in trading methodology. And what I usually do with them is I say, you know, imagine if I went on CNBC and I gave you 10 minutes to get on CNBC and you had to deliver your analysis on the dollar for the past week. This is a lot of what people do in the markets, by the way. And a lot of people, when they're brand new to the markets, they're really intimidated by them because they don't really know how to analyze them. And they're intimidated by analysts and all their fancy talk. Seeing how I've been on the radio before and I've actually been on TV before to analyze the market, you know, all it does is when people are given a task by somebody like at CNBC to deliver analysis on the dollar, all they really do is, in this case, you can look at all the charts together to give you kind of an overall view of what's going on. And then you just got to add a little bit of bullshit to it to give them a reason, okay? For example, if you gave me, and I didn't rehearse anything here, if you gave me 5 minutes before I had to go on air at CNBC to analyze the dollar on this, I would say, okay, well, thanks for having me on today, folks. When I look at the dollar over the short term, you see that the dollar is actually very strong against the euro, the yen, the pound, and the Swiss, which are 4 of the most actively traded currencies in the market. And it's also very strong against New Zealand, which happens to be one of the highest interest rate currencies in the market. And overall, the dollar is really not showing any weakness against any of the currencies for the last week. It is slightly sideways against the Aussie and sideways against Canadian. But if you had to look at the dollar overall, I would say the dollar has been actually performing pretty well. The dollar has been actually been extremely strong for the past week or so of trading. This probably has contributed to the fact that last week we had Yellen come out, and there's going to be added pressure on the Federal Reserve coming out and being able to deliver some better guidance as far as when they're going to raise interest rates. So traders are kind of looking ahead to dollar strength based on Federal Reserve pressure of having to essentially give the market better guidance on raising interest rates, which in turn should cause a stronger dollar. And so, you know, everything I just said there kind of sounds exactly like what an analyst would say on CNBC. But all I did was looked at the charts and I added a story behind it, just to give people an overview of what's going on, you know, a reasoning behind it. Truth be told, there can be many reasons behind the analysis that we do on here. Now, from here, one thing that I want to share with you before we go in, and you know, going into PitView takes one click of a button to do this type of analysis over different time frames. But if I wanted to go in and say, okay, well, I see the dollar's overly strong. One of the reasons why we always start off looking at the dollar pairs, folks, is because a lot of times, since when you deal with cross-currency analysis and you're looking at something like relative strength in the market through cross-currencies, you're going to look at the dollar pairs first, because whatever the most extreme trends are versus the dollar, that's generally going to be the currency that you're going to want to look at next. For example, if I was trying to figure out what currency has been weakest in the market as of late, which currency on here looks to have the most extreme trend as far as weakness versus the dollar? If we wanted to find the wimpy kid in the schoolyard. If we wanted to look for the bully, we'd probably be looking for, since the dollar's strong against 5 and sideways against 2, we'd probably want to look at the Aussie or the CAD to find which one's the stronger between those two. But if we wanted to find the wimpy kid in the schoolyard, what do we want to do is we want to look for which one of these trends has the best slope on it that looks like it's the weakest. In my book, it would probably be the euro right in here, correct? So a trick you can do if let's say the next currency you wanted to look at over the short term was all the euro pairs, what we would do is we would go ahead and we'd pull all the euro pairs over to look at the euro overall in the market. So that's what we'll do. We have euro dollar right in here. Here's dollar yen. All we have to do is, if we want to switch the dollar yen to a short-term view on the euro yen, we're going to drag euro yen on top of that. Here we go. Here's the pound right in here. I'm going to change that to euro pound. Here's the Swiss. I'm going to change that. Just left click and drag the euro Swiss on top of that. Here's New Zealand. Left click and drag euro New Zealand on top of there. Euro Aussie. And then Euro Canadian I'll put right down here. Now when we look at the Euro pairs altogether, we already know the Euro is weak against the dollar versus the yen, which was another one of the very weak currencies that we saw versus the dollar. We started off right over here. The Euro got stronger, then it got weaker. We'd call the Euro more sideways versus the yen. The Euro is strong against the pound, or I'm sorry, weak against the pound. You see the pound has been gaining strength on the Euro. The Euro is weak against the Swiss, so weak against the pound, weak against the Swiss, weak against the dollar, sideways against the yen. It's slightly weaker against the New Zealand dollar, right? Because there's a slightly downward slope here. It's certainly weak against the Aussie, and it's weak against Canadian. So in this case, I believe we found the other side of the equation. We found the wimpiest kid in the schoolyard, right? For the past week anyway. We found that the fact that the Euro is weak against 6 of the currencies on here and sideways against 1. Now, if a team had a 0-win, 6-loss, and 1-tie record, would you consider that to be a pretty wimpy team? Yeah, you probably would. Yeah, you'd probably consider that to be one of the wimps in the schoolyard. If it's not strong against any of these currencies, it's weak against 6 of them, and it's neutral against or sideways against 1. So we have the dollar at kind of the top side of the equation. The Euro would be at the bottom side of the equation. Since the Euro we know as far as relative strength is one of the weaker currencies and the dollar is one of the stronger currencies, could that give us a better probability if we match those two up together of knowing what the prevailing direction could be in the market? Well, absolutely. Absolutely. From here, what we can do is if we wanted to change, and so that's how you can look at different currency pairs on your charts. And I know this is a PitView class, but understanding this basic concept is extremely important when you're starting off in trading, because charts and PitView work in tandem with one another. Before we get into PitView, somebody just asked, well, how do I switch the time frames to more if I wanted to find the long-term trend? Well, if we're looking at the long-term trend, you would switch these all to daily charts. And you can actually save these profiles in MetaTrader. This is not a MetaTrader class. You can do this type of analysis on any type of platform. And this is where I would zoom in. If I click on all these charts, now that I've made them all daily charts, for the long-term trend, I generally want to look back approximately 3 months or 1 quarter. To kind of find the longer term trend. When you look at the Euro, in this case we're going back to May, so that covers us. We're at the end of August right now, going back to the end of May, looking at the past 3 months. We see the Euro is weak against the dollar, it's weak against the pound, weak against the yen, weak against the Swiss, weak against New Zealand, weak against the Aussie, and weak against Canadian. I don't think it's any secret based on Mario Draghi and the fundamentals behind this that the Euro has been getting its ass kicked against it's been taken out to the woodshed over the long term, getting extremely weak versus all the other currency pairs. So that would be, whenever you set these charts up, what you can do is you can go up here under Profiles and click Save As and say, okay, this is the Euro long-term trend, long-term analysis charts, and you can save under File. You can save this profile. You see under Profiles, you go to Save As, and you can change this to Euro long-term analysis. And when you log into your computer, when you save these profiles, you can switch between different profiles. You can keep this up if you wanted to go more of a medium-term swing type of time frame, and you can change these all to 4-hour charts. And it would give you, it would go back approximately a month on the chart to give you more of a view on the medium-term trend. I don't want to do that here because I only got about 20 minutes left. I want to kind of show you how PitView can come into play on this. Because what we've found so far is we've kind of gone over how to do comparison analysis on the charts to find the prevailing trend as far as price action goes. But we also want to be able to do is we want to be able to identify what's the real-time trend when it comes to comparison analysis. This is one of the tools, Global View, which I feel is such a powerful trading tool when it comes to multiple time frames as far as what you're trading in the market. Because Global View is going to do the same type of analysis, only just like I state oftentimes in this class, one thing you have to know about the PitView indicators is that the things that are shown on PitView are not shown on the charts because it's looking at market maker action. It's looking at market maker imbalance, the buying and selling pressure from the actual market makers themselves. So when you're wanting to go in and do real-time analysis as far as what these trends are, when you have your PitView screen up, if you go up here under layouts, under indicators, and all I'm going to do is I'm going to open up a global view window here. See where it says global view? And that's the only one that I'm going to open up. I'm just going to keep just that window open just so that we have a point of reference on here and something that can give us a little bit of clarity as far as the time frames go. Now on the global view, when you first open it up, you can see here that it's given me a group total as far as what the most well bid currency has been over the last hour in the market. See, that's pretty cool when you can do this type of analysis looking back just the last hour. This will show what has been the most well bid currency over the last hour, in this case the Aussie, and which currency has been from a sell imbalance standpoint versus all the currencies on here. This is comparison analysis also, because these currencies, when it's giving you these buy and sell imbalances in here, these totals, it's comparing them and giving you an aggregate total of these currencies of how they're trading against all the other ones listed. So in this case, we got Aussie at the top of the list for the last hour and New Zealand at the bottom of the list. The Aussie has been strongly bid by the market makers versus all the other currencies. The New Zealand's been strongly offered versus all the other currencies over the last hour. Now this might be something I look at if I'm trading off of 1 hour charts. But let me do something real quick. I'm just going to expand one of these charts real quick. I'll go with the Aussie in here, and I'm going to change it down to like a 1 hour time frame. And I'm going to change this to the Aussie New Zealand. Now looking at this type of analysis, what we can do is if we see Aussie is the most well bid currency and New Zealand is the most well offered currency over the last hour or so, what we can do is we can scroll down. I didn't mean to go to generally speaking, whenever you're doing this type of analysis, you want to look at a longer term time frame. So if I was using a 1 hour chart to try to gauge strength and weakness, I'd probably want to be, I'm probably trading off like a 5 or a 15-minute chart because a lot of times you want to move up to look at the longer term comparison analysis when you're trading on this. And I'll show you some other ways to do this. So looking at the 5-minute chart on Aussie New Zealand, if we were more of an intraday trader, you can see that here's Aussie, here's New Zealand. It's coming down, so it's kind of diverging off of this trend. Now we can expand this view and actually look at all the Aussie pairs and all the New Zealand pairs. But when you see Aussie at the top of the list, New Zealand at the bottom of the list, generally speaking, the first thing I'm going to do is I'm going to go look at the Aussie New Zealand pair. When you look at Aussie New Zealand, you see that it's come down quite a bit. When you look at it over the last hour, it's actually retracing to the downside. However, the Aussie is well bid, the New Zealand is well offered, and what we might want to do from here is if we're looking for opportunities and we see that this is coming down in price, we can actually look for actual opportunities to possibly buy or sell, buy the Aussie New Zealand pair. Things that we've learned in like the intermediate class, for example, was, we have a trend line in here on the 5-minute chart, 1, 2, 3 points on a trend line. This might be giving us an opportunity to possibly go long Aussie New Zealand just by doing this type of comparison analysis on the 1 hour time frame, narrowing it down to a 5-minute chart. We know that this is a well bid currency on Aussie and New Zealand is well offered. So this is kind of matching up the bully and the wimp in the schoolyard, and we can go in and start looking for opportunities. If you don't know what the lonely bar method is, that's where we would go in and look for a breakout above this trend line for a candle to completely form open, high, low, and close above this trend line to go long. Put our stop down here below the swing low. Actually, you can use this for a swing low if you were a short-term trader, because this would be the previous swing low right in here, and look for like a 1-to-1 risk-reward ratio type of trade. So when we're going through comparison analysis, it all depends on what your individual trading methodology is. Generally speaking, when I'm just looking at what's driving the market over a certain time frame, for example, we can open up multiple views of the global view also and look at what it's doing in multiple time frames. Now, if I am trading off, a lot of you that have been through some of the swing trading in the intermediate class know that, you know, like one of the time frames I like to trade off is the 1 hour time frame to look for more swing trading type of opportunities. Now, still just focusing on the global view here, what I might want to do is I might want to open up a couple of more global view windows to kind of see what's been shaken, not just for the past hour, but for scaling up on my time frames. Let me show you how to change the time frames on this real quick. So I opened up another global view window. What I'll generally do, and this will give me an opportunity to show you how to customize this. So if I'm looking at, if I'm trading off, let's say, my 1 hour charts, what I might want to do here is I want to expand my view. When it comes to basic time frames, if you want to get confirmation of what's called a prevailing trend, you want to look at longer term time frames, not shorter term. And when you're trading off of what we call a trigger chart, like a 1 hour chart, you'd probably want to confirm this type of analysis by looking at like a 4 hour chart, and then also even possibly an 8 hour chart or even a 24 hour chart you can pull up as far as a global view indicator. That way, when you're trading with more swing type of methods, you can get a better overall view of what's been happening over the last 4 hours. When you're looking at opportunities, what's been happening for the last 8 hours, what's been happening in the last 24 hours. You can do that all here on Global View. Let me show you how to customize this. When you pull up the Global View on here, first let me show you how to change your time frames. If you go to change time frames and sessions, when you right click on Global View, you can customize this. If I'm trading off a 1 hour chart, hell, let's look at the past 24 hours. We can look at the past 24 hours worth of trading to see what the most well-bid currency and most well-offered currency has been. So under here, you have to have your sessions set at rolling sessions. That way it's not just going to go back to the beginning of, let's say, the US session in the market. And the session length, if you want to change the hours, you would change it under the session length. If you want to go back mere minutes, like to 5 minutes, 1 minute, if you're more of a short-term trader, you would change the minute length on here. So what I'll go ahead and do is I'll apply this, and you can see now I'm looking at the last 24 hours in the market. Now the other thing is that oftentimes when you pull up these different PitView and Global View windows, you'll have different, you can look at leaders, followers. These are all things that we went over when we went through understanding the bid and ask. But what I like is clarity. So what I'll generally do when I'm trading, when I'm looking at Global View is, for one thing, I don't want to see the minute-by-minute charts on there. All it does is confuse people. And the other thing I'll do is under Show and Hide Columns, all I did was unclick the 30-minute leaders. A lot of times what I look at is leaders, followers. Leaders is giving you the buy, sell, and balance based on when market makers have led or created a new bid and ask price and what the buy and sell and balance has been there. The followers is showing you the totals is whenever a market maker has followed to the inside bid or inside ask price. What I'll generally do is I'll look at the totals. So what I'll usually do is I'll uncheck the leaders and change it to totals, because this is giving you that algorithmic view of not just what's happening over the last, from a market maker standpoint. It's not really giving you an overall view of, a just the leaders or just the followers. It's giving you kind of based on all the market makers of how they're trading against all the other currencies. It's giving you what the total buy and sell imbalance has been. If you're ever confused at which column to look at, especially if you're brand new to PitView, I would say you can never go wrong by looking at the total section, because that is giving you that total overall view. As you get more advanced into PitView, you start, some people might consider when a market maker leads inside the bid and ask to be much more aggressive than following. But, for what I do personally is I generally will look at the totals, because it's almost like looking at more of a smoothed out view of what the market makers are doing. So let's say if I'm trading off a 1 hour chart, I may not even have the 1 hour totals on here. Let me change this other one here to look at, let's say, a 4 hour time frame. And from here, I'm just showing you kind of how to customize these things. So if I'm starting my trading day and I want to trade off, let's say, my 1 hour charts, and I'm looking for swing trade opportunities. Well, in this case, if I look back the last 24 hours, the past day or so, the Aussie's been the most well-bid currency against all the other currencies. The New Zealand dollar has been the most well-offered currency, so that matches up well with our 1 hour time frame also that we just had on there. For the past 4 hours, if I want to kind of nail down that view a little bit more, you see the Aussie is also at the leader of that board. So this shows you that versus all the other currencies, the Aussie has been very much well bid. Now let's put this down into basics. Now just think about this for a second and don't make things too complicated in your head. When we look at all the other charts together, by the way, that we had on, versus the dollar. Remember, the dollar was very strong except for versus the Aussie. It was sideways. So the Aussie is actually one of the stronger currencies in the market also when you look at just the short-term view on the charts. But now that's being matched up with the fact that, the market maker view is also matching up for not only the last 24 hours, but the last 4 hours, showing that the Aussie is very much a well-bid currency. Let's just take a look at, we'll take a look a little bit closer here at the Aussie-New Zealand pair. Now here's what we were looking at earlier, and if we were going into the market to look for opportunities, just think about it this way. If we saw all of this information collectively, not only on the charts but through the PitView, knowing that the market makers are very much in the mode of buying Aussies, would you be looking to buy Aussie, or would you be looking to buy this pair today or looking to sell it based on all this information? Yeah, of course, you'd be looking to buy it. I mean, without a doubt. It's giving you a sense of direction, the prevailing trend. A lot of these things are kind of matching up together when you look at the Aussie overall. So if I'm looking at something like the Aussie-New Zealand, New Zealand has been very much well offered over the last 24 hours and over the last 4 hours. It's in the red down in here. That means selling pressure on these individual currencies. From here, if you were looking for opportunities even on the swing trading charts up here, what you might want to do is let's say, okay, well, is there any trading opportunities that exist right now on Aussie? You can kind of see when you draw your trend lines on here, if you're using just simple support and resistance trading. If you are trading off 1 hour charts, this is not the prettiest trend line in the world, but you have 1, 2, 3 points on a trend line to where you could even start looking on your 1 hour charts for possibly what we would call a break of the trend line. It's made lower highs throughout this time frame. This is one of the things I talk quite a bit about when we talk about the difference between a trend and a retracement. If you look at the last, it's what's been happening with the Aussie-New Zealand pair, it's been making lower highs. You see that? Lower high, lower high, lower high. The market makers are saying, well, we like this. We're bidding this currency up. So this has been making lower highs over these time frames, but over the last 24 hours, the Aussie's been very much well bid. Over the last 4 hours, the Aussie's been well bid against all the other currencies. Over the last 1 hour, it's been well bid. New Zealand has been well offered from a selling imbalance. if this is starting to shape up, is starting to, as far as giving you an idea that if I was looking to pick a direction on Aussie New Zealand to trade it today, I'd probably be looking for buy opportunities. So it just makes your analysis that much better as far as it makes you have that much more confidence in which direction you might want to take a trade. From here, I mean, we can nail this thing down to medium-term swing trades. We can nail it down to like the 5-minute charts for short-term trades. But the thing is that, and I'm going to pose this question to all of you, do you think it's important to have some sense of direction before you put a trade in? Not only is this giving you a sense of direction when I've shown you how to do this on the charts, but also shown you how to do this with the global view of just switching out your time frames. It's giving you a sense of direction, not only that of what's happening with the prevailing trend on the charts when it looks at price action on the charts, but it's giving you a better overall sense of direction of the common question that all traders have. What do all traders want to be able to do? They want to be able to trade along with the big money, right? This global view is showing you what the big money traders have been bidding and offering in the market, what the market makers, all the market makers have been, which currencies have been the most well bid by the market makers, liquidity providers, and which ones have been well offered. In this case, if you were going in to place a trade to set, let's say, buy on a 1-hour time frame, this is giving you that confidence that you are, in fact, if you wanted to look for a buy trade, you're not only trading with the overall trend, but you're also trading along with the market makers also of what they've been doing. It's extremely powerful stuff when you put things into that kind of perspective. If you want a closer view of other pairs that you could possibly trade with the Aussie, instead of going back to our charts, what we can do is pull up what we call group view. What group view is going to do is, if let's say I double click on the Aussie here, and here let me take that 30-minute, I just right click here and go uncheck the 30-minute leaders on here. On group view, if I want to say, okay, what other currencies might I look at? You know, what other currencies is the Aussie being very well bid against for the last 24 hours? Well, here's the dollar. Aussie's been well bid against the dollar. It's been well bid against the euro. You know the euro has been getting its ass kicked, so that's not a bad little deal there. Versus the Swiss. The only one that it's neutral against, doesn't this make sense now? The only one it's neutral against is Canadian. What was on the charts on Aussie and Canadian? They were both sideways. I think this without a doubt shows you just how powerful this can be. So what I might do here is, let's say I want to look for other opportunities. Maybe I want to skip over the dollar, but let's look at Aussie Euro. That would be the Euro-Aussie pair, by the way. It's showing you the Aussie's been well bid, a lot of buying pressure of Aussie versus the Euro. When I pull this up on a chart, it's going to show me the Euro-Aussie pair. And so since I know the Aussie is very, very strong, you see the Euro has actually been one of the more well-offered currencies of the last 24 hours also, even though it's kind of at the top of the section here on the 4-hour chart on global view. From here, I might just going to pull up the Euro-Aussie pair to see, okay, is this giving me, do I see anything on here that could give me a potential trade signal to go short on Euro-Aussie? You know, you look at the 1-hour time frame on this, and it's showing no. Well, there's always going to be some type of opportunity in the market, but in this one, it's not as clear. We don't have any as clear trend lines, because on this chart on Euro-Aussie, if we were looking at Euro-Aussie, we'd be looking to go short. Because going short Euro-Aussie means you're going short Euro and long Aussie. And we know the Aussie is well bid against the Euro. This is always, the group view is always going to put whatever currency you want to focus in on, it's always going to put that currency as the base currency. The reason for that is because it is measuring buy and sell imbalances off the bid and ask price. If there's more action on the ask price on the Euro-Aussie pair, that's more buying pressure on the Aussie, so they swap those around. That can be kind of a difficult concept to understand. So if we're looking at the Euro-Aussie in this example, you know, there's really not any clear support or resistance levels to go by on this pair. If we're looking at, let's say, a 1-hour time frame, we can also narrow it down to 5-minute charts if you're shorter term. We can draw Fibonacci retracements on here and say, okay, well, I might want to look to sell this since Aussie's been so strong, if it retraces back in that trend, knowing that the Aussie is still much a well-bid currency, it opens up a plethora of trading opportunities and ideas when you're doing your analysis this way. Let's see, what else was the Aussie strong against? If we wanted to, we can go ahead and look at the Aussie US dollar, since it is a very much an actively traded pair. This is another example of the dollar actually for the past 24 hours and the past 4 hours has been well offered. You know, whenever you're matching anything up in the green with something in the red, that can also give you a nice little view. Here's Aussie US dollar pair. Aussie US dollar again has been making higher highs and higher lows throughout in here. So in this case, you know, looking to, and you see that over the last hour or so that it's been coming down, even though the Aussie is very much a well-bid currency. So this is another one to where I know a lot of times you'll look at moves and they've already happened. But, you know, specifically when you're looking at different charts, you can sometimes get that feeling like, oh, I missed it. There's nothing wrong with that. You're not going to hit every trade every time it happens. But this is another one where the chart kind of follows what's been happening on this screen, but you see that it's trending down right now. The Aussie dollar's coming down. If I was looking at all this information of the Aussie being so well bid, this is another example of the difference between a trend and a retracement. Do I think this is the start of a trend down on Aussie dollar? No. Could this be an opportunity to where I might look for buying opportunities on it as it retraces back? Absolutely. Just judging by the overall strength of the Australian dollar. How might we do that? Well, you know, support and resistance trading tells us, you know, we can look for whatever the last validated trend line has been. Got 1, 2, 3 bounces off this trend line down in here. You might want to look for it to come down to this trend line and maybe make a bounce off of the trend line to maybe look for an opportunity to go long. It just presents so many different opportunities through so many different time frames. Now, if I'm confusing you, I know my hour's up here. If I'm confusing you on all this, the subject of this class was basic comparison analysis. It was going through and showing you what comparison analysis is and how that applies to not just the charts, but also to PitView and what Global View is doing for you. From here, we can build off that knowledge. I'm kind of going a little above and beyond by kind of pulling up the different charts and looking for trading opportunities in our little PitView basics class, but we can build off of this certainly. By, you know, narrowing things down and showing you a little bit more clarity on different trading methods you can employ on this. But the basics of this class was finding the prevailing trend. I think by going through and showing you, you know, looking at all the charts together and showing you what's happening and occurring on all those charts. Let me bring all those, let me take down some of these objects. But showing you what comparison analysis is and how it works, I think that gives us a very good idea of what Global View is doing for us, for one thing, and it should also give you a very good understanding of of how to find the prevailing trend, how to set this type of analysis up on your chart, and not just how to set it up on your chart, but also how to analyze it on a chart over the long, medium, and short term. So I hope this was hope this was at least entertaining, if not extremely helpful for you as far as different ways in which you can find which currency is in play, because that's what this is all about, is finding the in-play currency, finding the driver currency, and establishing, you know, strength and weakness in the market. And all it does is give you that confidence and direction. And it also helps you to answer that age-old trading question of, what should I trade today? Essentially. For more on this, let me go ahead and pull up my information here so you can see that on your screen. Whoops. Go back. Hold on 1 second. There we go. Any other questions? Here's my information. You can email me at steve.nurre@pitview.com. Most of you, I believe, are subscribers to PitView, but if you need to subscribe or if you're looking to start a free trial, you can go to pitview.com/web. I hope you found this to be an entertaining class here. I'm going to go ahead and stop the recording.